Not yet.
Hey, hello everyone. Welcome back to Deskera Friday Features webinar. And this is Saurabh. I have with me David here as well.
Hi,
And
everybody.
hey, and I'm so glad to have you back on this webinar today. We have got lots of interesting stuff. So we'll start off with uh, our main agenda for the day, which is 10 ways to improve your cash flow. Cash flow is important for all businesses, but especially more so for small businesses. So we'll talk about 10 ways in which we can improve our cash flow. Then we will go through some of the new features and updates that we have added in Deskera, which includes campaign reports. We can now set up a custom favicon in the help center. You can customize the contacts column view. You can also capture negative amount in expenses. You can also bank fees can be captured now, and we have updates for you on UK and Netherlands, and in Deskera people, state and federal taxes for all 50 states in the US can be calculated using Deskera people now. So we'll go through all of this and through some Q&A and some other interesting stuff, as it goes by. So let's start off, and we'll be switching over. So now let's talk about cash flow, which is the first item. So cash flow is so what people think about cash flow is that, I mean, there is a misconception that cash flow is the amount of money that is coming in, but it's not just about the amount of money that you are going to get in your business. It's also about when you get that money, when you get that cash in your bank. And that is something that uh, surprisingly most businesses overlook. There was a survey done, and uh, about 64 to 70% of small businesses mentioned that they were taken by surprise when they were hit with a cash flow problem, because for them the profit and loss looked fine because they had all their account receivables, the balance sheet looked fine, but when it came down to cash flow, they suddenly realized that, hey, we cannot pay the employees this month because we have not received our outstanding receivables. And we will be sharing some interesting stats with you as well today on this. And we will take a look at how we can improve the cash flow for your business. So let me go ahead and share that with you right now. Okay. So you so if you can see the screen here now, then this stat I just mentioned, 64% of small businesses face serious cash flow problems at some stage. And when I say some stage, and when I say serious, I mean real serious, like you are not able to pay your employees on time, kind of serious, or you end up incurring late penalty for payments that you owe to your suppliers or vendors. And these are serious times, for a small business and for a small business owner to be in. And all of this because of not managing the cash flow properly. Now, in the US, for example, the average outstanding receivables for small businesses is $53,000. That's a lot of money for a small business. And one of the primary reasons for such big numbers in outstanding receivables at an average value is that they do not get paid on time. So, and this is where the problem happens, and that is why it takes people by surprise, because uh, when you look at your profit and loss, right, the profit and loss has got account, it has got your income and your expenses, and the income is coming from the sales account typically. And the sales account is something that is populated as soon as you create your invoice, but you have not received that money. So that's why it sits under account receivable and sales. So account receivable in your balance sheet, sales in your profit and loss, and things look good, they look hunky dory. But then when you go to your bank, you realize there is no cash. And that is because there is a trend of not getting paid on time. Now, this could be because of multiple reasons, and we'll try to talk about that as we go ahead in the presentation today. But the end result is that 33%, nearly 33% of small businesses do not get paid on time, and they even end up extending. I mean, they don't even receive that money for more than 30 days after the due date, and this is due to a variety of reasons which we'll talk about. Uh, right. So the important thing for all of you to remember is that it's not just about how much money is coming in, because how much money is what is impacting your um, account receivable and sales accounts in your profit and loss and balance sheet. But the when is what you get to see in your cash flow reports and your cash flow statements, and that is just as important. And that is something that all of us as small businesses have to be aware of, be cognizant of, and we should be taking proactive steps to avoid falling into the trap of not having enough cash on hand. So, without further ado, let's go ahead and take a look at 10 ways that we can improve cash flow for your business. So, number one is send invoices out quickly. Now, this may sound or seem like a very trivial thing at first, but the fact of the matter is that 80 to 90% of small businesses do not have a system. They do not have any software to process their invoices. They are doing it using Excel. They are doing it using spreadsheets. They are doing it on pen and I mean they are doing it using pen and paper. And even if they are using some kind of system, maybe it's a legacy system or a desktop based system which they got from their local vendor, etc., and it doesn't have the capabilities that a fully automated cloud system can bring to them. As a result, they create an invoice, but somebody has to print it out. They have to either take the printout and they have to send it via mail, or somebody has to hand deliver it, or they will take the printout, then or they will create it in Excel, and then they will convert the Excel to PDF, and then from that PDF they will email it to their customer, who will then see it, and then maybe they will take a printout, and the cycle goes on, and this is a lot of redundancy in the process, which many small businesses follow. They And because they don't have a system, they don't know how many invoices are getting created on a daily basis. Especially, if I am a business owner, I am running everything, and I lose track of how many invoices are getting created every day, how many I have sent out, have I actually corresponded with the customer or not, etc. And which is why they have an invoice that is sitting in the system or in their records, but they have not sent it out to the customer, so the customer never knows. So only after you send out the invoice to the customer will the customer say that, hey, I received this invoice now, so I'm going to pay later. And that is one of the biggest reasons why they get paid late. So one way to avoid that is send out your invoices quickly. Now, obviously, doing it manually is tough. So use a system like Deskera, and you can quickly create invoices. You can immediately send the invoice out using email directly from the system, and you therefore are confident that, hey, the invoices have been created, they have been sent out, and I can be rest assured that the customer has received them. Then the second reason is, or the second way that you can improve your cash flow is to get deposits or advance payments for larger orders, or if possible, try to get it for all your orders. There is no law that says that you cannot get it for smaller orders. So if there is an option, if you have the option to ask for advance payment, do so. Do not dither on that, because that means that you get the money upfront, so you have money in your account, and you can then deliver good work to your client without having to worry about where the next paycheck for the employees is going to come from. Now, many businesses do not follow this, and there are there is no good reason to not follow it. If you have any, if you think that it is not possible for you in your business, then please leave a comment in the chat, and we'll get to that, right? But I cannot think of any good reason to not ask for an upfront payment. I mean, there are cases where there will be some pushback, yes, but typically, if your client is willing to pay you for the services that you are going to provide to them, then they are willing to pay you, if not the entire amount, then at least some part in advance to you, and you should uh, absolutely pitch for that. Now, the third way that you can improve cash flow is to offer flexible payment options. So when I say flexible payment options, it's not necessarily online, right? But yeah, I mean, always include an online payment option with your invoices, but also give the option to pay using check, to pay using cash, or whatever other means that may be possible. Why? Because you want to make it easy for the customer to pay you, right? You don't want to make it difficult for them to pay you. That okay, I have to. I mean, if somebody's only accepting, payments in check, for example, then they are creating this problem for them that uh, see, processing a check requires some time, right? You have to get your checkbook, you have to see the value from the invoice, then you have to write that number in the checkbook, you have to sign it, you have to keep a track of whatever checks that you have sent out. Somebody has to maybe in in many companies the check is prepared by the finance guy, who then sends it over to the boss to sign it. So there are all these manual steps involved in creating a check, and that is something that you should try to avoid as much as possible, which is why bank transfers, uh, you can use ACH or gyro payment in Southeast Asia, right? UPI payment in India. There are options that you should provide to your customers to help them pay you faster, and this will have definitely a positive impact on your cash flow. The fourth point is to track due dates and to forecast your sales. Now, again, if you don't have a system, or if a business does not have a system in place, or even if they have a system in place, there is no diligence around tracking the numbers or looking at reports on a regular basis. If you're not doing a weekly or a fortnightly or a monthly review, depends on your business, then there are chances that you will miss out red flags or indicators of a slump that is coming your way, right? So let me take an example here, right? If let's say that that most of your uh, clients have an annual payment, and you signed up a lot of them in the month of March, but your dues to your suppliers are due in Feb, right? Then this is something that you can predict by looking at your account receivable reports on a regular basis. You know that okay, how long is the payment due, when is the next payment coming, how many invoices are not paid, when is the payment expected, and you can use this data to forecast your sales and your collection. What you want to make sure is that your collections is always above your liabilities or your payouts or your actual expenses. If you manage to do that by tracking your data and by thereby taking decisions to make that happen, then you will find yourself in a much better position to when it comes with to managing positive cash flow for your organization. Now, the fifth point is lease now or buy later. So, when we are starting a company, right, then there is always this enthusiasm or so to go out and get the latest new gadgets and stuff and whatnot. Uh, don't do that. I mean, get do that, but don't buy it outright. Try to spread your payments by using a lease option. Do not buy stuff outright, because you don't know what the future is going to hold. Sales may go up, they may go down, and you want to keep some level of liquidity in your hand to manage your cash flow, right? One way to do that is to not buy stuff but to lease it, and we are doing it uh, for a lot of things. but somehow we don't do it for many other things, right? So for example, if we have to set up a server, then we'll go and use AWS. If I have to use mail, I'll just sign up with Gmail. These are all examples of, I mean, we are effectively leasing. So software as a service, infrastructure as a service, platform as a service, all these are concepts of not buying stuff or creating stuff yourself, but rather using what is already there at a fee. And once you have this in control, and you know that, okay, you are going cash flow positive, that is when you can choose to switch over from this to your own infra or to your own assets. But do not invest in fixed assets. If possible, try to lease fixed assets as much as possible. Then there are obviously some things that you will have to buy, right? If that is the case, then use credit terms or payment terms, so as to speak of. Now, earlier, if you remember, we talked about using deposits for receiving money. Similarly, for this, when you are paying out, try to break up the payment into installments. Use credit terms wherever possible, or if not possible, then use your business credit card. I always recommend against using your personal credit card for buying stuff for your business, because that will be a problem later on when you are accounting your year end, etc. So if you have a business credit card, use that. And wherever there is a possibility of using EMI options, zero EMI options, use that. I mean, no point in spending money outright. And if you have to, then break it up into as many installments as possible. Why? I mean, even in cases when you, for example, have to pay a little interest, right? It might be worth it in the long run, especially when you are going through a crunch situation with cash flow, because uh, you do not have that liability on your head that you have to solve right now. So it can get transferred, and you can, somehow manage your cash situation then. But if you have that fixed liability, for example, or if you don't have that money in the bank because you have already spent it, instead of spreading it over, let's say 12 months or 24 months, then I mean, you don't have an option. You will have to then end up, I mean, you will probably end up taking a loan or something. And ideally, you should avoid that if possible. Now, there is this concept of purchasing cooperatives, and there are purchasing cooperatives all over the US and different parts of the world. What purchasing cooperatives are is like Groupon for businesses, right? That you can go and buy stuff in bulk, and cooperatives have these deals with suppliers and vendors, and you tend to get much better prices if you are buying it through a purchasing cooperative. Yes, there are going to be some downsides to it. Obviously, I mean, there are always pros and cons. The cons will be that you won't have as much decision making power over what you get and what you choose. But what you have to decide is that, I mean, if this option makes sense for you, and if you have a purchasing cooperative available that you can join to get the items that you need, be it raw materials for your business, be it assets, whatever. I mean, even for any office supplies, right? I mean, there are cooperatives that help people with that, right? So wherever possible, look for a purchasing cooperative in your area or in your state, and join that. Look at what are the options available there. They generally have a lot of stuff. I mean, I remember I was talking to one of our customers who was a part of Texas small business purchasing cooperative, and they were actually telling me about how much benefit they have in purchasing just raw material through the cooperative instead of going directly to the market through vendors. So yeah, I mean, it may not be the right thing for your business, but if it is, definitely try that out. Then number 8 is uh, exploring the elasticity of your customers with respect to price, right? So you have set prices for your products, for your services, and often, I mean, we don't experiment with it a lot. We are afraid what the market will, I mean, how the market will respond to. And there is some merit to that. I mean, you don't want to make too drastic a change to the price point, which is a good market fit for your business. But it is always a good idea to fluctuate it a little bit on the higher side or maybe towards the lower side to see how it, how the market is going to respond. So you must keep experimenting with with your selling prices, right? If you're not doing that, then you're missing out on potential upturns, or so it goes both ways, right? Maybe your demand will not go down even if you increase your prices by, let's say, 5%, but you never know. So you have to do an experiment, and typically to do such an experiment you would want to go down the AB path. So if you have, for example, a website, right? Is it possible for you to do an A/B testing for the same product? If yes, then my suggestion would be to go ahead and do that, right? If you have a physical store, then doing this is slightly difficult, but actually it might not be as difficult as we think, because if you have a physical store also, or even if you don't have a store of any kind, right, you can still mark up or mark down prices a little bit to see the impact on the volumes that are being moved out on a daily basis. And that is something that would help you to judge the market reaction to the prices that you are offering your services or products at. But don't be afraid of changing it, is what I'm trying to say. And even if you mark it down, it is possible that the markdown will be compensated with the increase in the volume. So you may end up actually making more cash and more revenue from reducing your price a little bit. Again, it depends on the market, depends on your customers, depends on the product and the services that you're selling. So it is a suggestion, but try it out. Don't be afraid to experiment with the selling prices of your products. Then number 9 is, it might sound intuitive that, okay, cut down on process costs, but uh, when I say process costs, right, what do we mean here actually? So process costs are redundancy costs because of having an over elaborate process in place. So that is the obvious thing that comes to mind. But it is also about following a checklist or a procedure to get things done, especially when you are buying something or when you're selling something, right? Make sure that you have a checklist. Have you? So, for example, let's say that you are getting that you're about to send out a big PO, or you're about to sign off on a big order to your supplier, right? Make sure, I mean, have you gone through everything in your checklist? Have you explored all the possible available discounts? Have you explored the possibility of getting payment terms, favorable payment terms on the deal? Have you discussed late fees? Have you discussed penalty, etc.? Has all of this been discussed? Have you tried to negotiate it? I mean, it's not just enough to discuss it. It's important to negotiate for these things as well. Because if you're not negotiating for this, then you're at times, going to be playing into the hands of suppliers. And I know, I mean, this can be tough at times because you have like 10 things to do, which is why having a system in place, plays such a huge part in cutting down all the unnecessary admin time. You can do auto approval, for example, right? So for example, if you have an order that is above a certain value, then you can put it through a workflow automation tool to be so that you can send out specific notifications or checklists or task lists to your staff or to yourself, to make sure that the process is being followed. So not following the process also adds to the cost of the process, and you want to cut that down as much as possible. And the last point is to use invoice factoring services. So, what are invoice factoring services? Invoice factoring services are, so these are companies that would buy the invoice from you. So let's say you have an invoice of $100 that you had issued to a customer. Now, what they will do is they will buy this $100 invoice from you at, say, $98 or $95, right? So you immediately get those $95 in your bank account, and then they will go and collect the $100 from your customer, So that is one way that invoice factoring works. There are other methods also, wherein they take it from you and only when they collect it that they give you money, etc. But the idea is that at a small uh, reduction in the value of the invoice, you immediately get a cash influx in your business. And there are many businesses, there are many invoice factoring services across the world that are doing this. So if you have not considered this and you need a quick influx of cash, or if it takes a long time, for example, for your payments to come through, generally maybe because of the nature of your business, but you cannot afford to wait for that long to be cash positive, then this is one option that you can consider: invoice factoring, to immediately or quickly inject cash into your business. And that's a wrap for the 10 ways that we can improve the cash flow for your business. Now, earlier we talked about multiple reasons and why invoices don't get paid on time. Some of those we have kind of looked at when we were going through the reasons. For example, not sending out invoices quickly, or not following up for payment of invoices. Because I mean, small business owners, I mean, you guys, right? All of us, we have so many things to do that it is so easy to forget that we have to do follow-ups. It is so easy to forget that, hey, we have to send that invoice, or even to create that invoice, right, in the first place. So the idea is to get as much automation as possible. And the good thing is that many of these things you can do using Deskera books right now. So for example, you create an invoice, you can immediately send it out. You can include a payment link along with the invoice. You can use different payment options. So there is Stripe, there is Veeam, there's PayPal. I mean, we are adding more as we go on, right? And you can set reminders for invoices. So if for invoices that are not being paid out, you can automatically set reminders. So you pass on the follow-up stuff to the system, to whatever system that you want to use. Hopefully it is Deskera, right? And let the system take care of it. Let it send out reminders, let it follow up, let it send out recurring invoices. So every month you don't have to spend time creating recurring invoices, right? Just set it up with your Stripe link. The Stripe link goes out with every invoice that is created. You can automate a lot of this too. I mean, just by using one system, right? I mean, with Deskera, you're kind of already ticking the box for 4 or 5 of these ways that you can improve your cash flow right off the bat, right? And then there are others which are a part of your business process that you can improve to get an overall positive impact on your cash flow. So David, would you quickly like to show us how we can send invoices and set reminders and recurring, etc., in the system?
Sure, sounds good. So inside here, we can go to Sell. And then inside the invoices, we can click on the 3 dots. And then we have the email option here. So I can see my email, I can see my template, and I can send a copy to myself. If I'm connected to my bank account, then I can also check here for Stripe, meaning if not bank account. If I'm connected to Stripe, this is where you'll see the insert payment link, and I can check it here. We also have Veeam and PayPal as well under the apps. So this is where you connect to Veeam, PayPal to make payments as well. And you can set it up and connect it. We also have invoice reminders. So you can remind your wonderful customers to pay. So you can enable it here. And then you can say 1 day before due date, 2 days before due date, 3 days before due date, 4 days, 5 days. And you can repeat it every 30 days, 3 times. I think there's a maximum, though, of 5 times here. Or let me see. Yeah, maximum 5 times. So you can do.
Yeah, I mean, if you send them too many, then they might get offended.
Oh yeah.
Yeah, you
It
don't
depends
want
on how
to.
evil you wish to be.
Yeah.
And next, we also have advances that we were talking about. So under accounts here, accounting, we can go and do under expenses, we can do prepayments.
No, deposits, David.
Oh, deposits,
Your
sorry. This is your
prepayment is
prepayment.
you are paying advance to your
Oh, yeah.
uh,
You're
supplier.
correct. Yes. We don't want prepayments. Cash flow.
No,
So
but
advance payments here.
but this advice actually goes to the supplier also, right? So the supplier
yeah.
may also demand. So that's why you need to have both in your system, the
Very
ability
true.
to make advance payments and to receive advance payments. And I mean,
So
there is no reason why you should be giving advance payment to your supplier but not accepting advance payment yourself. I mean, you're putting yourself in a bad situation with respect to cash flow. Anyways, yeah, let's go ahead.
yeah. So you can put in your bank, and then you can do the what's it called payment method here. Bank, transfer, check, credit card, and you can add your account here as well. For example. And then you can put in the amount you're looking to get up front, and you can save it. And of course, then you can go, oops, what did I forget? Reference number. Also, it's good. It alerts you, lets you know what you missed out on. And then, of course, you can go back to your sell module, and then you can apply this advance to the customer. So, for example, here, I can then go and apply advance payment. That way I get paid up front, especially for such large orders. I should have probably done a lot more.
Yeah. So
anything else or?
yeah, I mean, just about advance payments, right? So advance payments is just one part, right? You should always, as I said, look for favorable payment terms wherever possible to positively impact your cash flow. So
Yes.
I mean,
So
so you don't have to wait for everything to get over, to ask for the money, right? I mean, you can be clear that okay, these are the milestones, and when these milestones are hit, then this is the amount that we need to be paid on. Or if it's monthly, I mean, if it's subscription, it's pretty straightforward, right? That okay, the subscription period is there. For every subscription period, you pay me. But if it is project related or service related, where there are milestones, make sure you have milestone payments. Do not just get money or ask for money at the end of the offering. I mean, you don't want your entire cash to be sitting there at the end at the mercy of something else, right?
correct. Yep. You need your money to pay your employees, keep your lights on, make sure everything is up and running.
Absolutely. So, and I mean, this is one of the reasons why a lot of small businesses end up taking SBA loans, especially in the US, right? And the scary statistic is that about, let me just see, it was about 30 to 35% of the loans never get approved, which is scary because I mean these are businesses who got into some pickle because of maybe some situation that was probably out of their control, right? And this I'm talking about, this is pre-COVID data. COVID must have made situations. I mean, COVID was a black swan. It is a black swan. So I mean, we can't really talk about those stats here, but some of these practices would have helped there as well.
Very true. Loans are very important. And then I believe the government passed some PPP for small businesses in the US, but from what I see online, it's like everybody's getting it.
Yeah. Yeah, I mean, we had a lot of. Oh yeah, I mean, one important point. I mean, because of COVID, it has come into highlight. I mean, and you mentioned grants, right? So there are. I mean, if there are grants available while purchasing stuff, please make use of them. Do not let go of them. I mean, Singapore has got a very good track record. I mean, the government is really helpful in helping small businesses when they want to scale up or when they want to, upgrade their technology or their offerings. And there are multiple grants. So there is PSG, there is IMDA grant, there was PIC earlier. So And most governments have these grants in place. And I remember we were talking to this company who wanted to purchase Deskera, and they were not aware of the grants that were there actually. And I mean, we advised them that, hey, I mean, you're buying this, so you should at least go for the grant. And they were surprised that, hey, I mean, these grants exist. So if you haven't, I mean, just do a quick Google search of what are the available grants uh, in your country if you have not done so, but make sure that you are up to date on that. Okay.
Yep.
So yeah, let's move on to the new features that we have in Deskera now. And the first one that we are going to take a look at is campaign reports in CRM. So in CRM now, in campaign reports, you can see which links were clicked on, how many times they were clicked, who clicked on them, and so on. So you will have a lot more useful data there. You can also use this report to quickly create target segments, and you can do another broadcast to them based on which links they clicked on. So it's a pretty powerful feature, and over to David to show you that.
All right, so inside here, we can see the CRM dashboard, and now we can click on campaigns. So after you click on campaigns, there we go. You can see your campaigns here. I can see it sent, how many people saw it. And inside here, I can see open, clicked, bounced, unsubscribed, and total opened here. I can see total emails, open, bounced, clicked here, unsubscribed, and open. And I can see opened, clicked, bounced, unsubscribed, and last opened, and total opened. And I see Kung is no longer opening my good old campaign emails. How sad. I was hoping to have at least 2 here. So you can see this information here.
I think we saw your last broadcast. So
what to do. But now you can see all this information here, and you can sort it out. Weekly, monthly, custom date range here as well. And of course, we have our filters, where we have our open status, unsubscribed, red date range. We have our links here as well. So I can see all the information here. And I can see the click performance here as well. And I can select my contacts here. And of course, I can create a segment now. So if I just want to create this one, I can put the segment name, description, and save it. And I can also add it to an existing segment if I want to. All right, so that's a quick look at campaign reports.
Wonderful. Let's go to the next item, which is Custom Favicon and Help Center. So we have the Help Center feature in Deskera CRM. I mean, it's been there for some time now, but yeah, you could not change that favicon that you get on your help site. But you can do that now. So you can get your own custom branded favicon on the help site that you create using Deskera CRM, and David will show you how.
Excellent. So inside here, you can now go to settings, and under guides, you can click here. So before you could update your hero image, your logo, but now we have favicons. So now I can go here and browse and look at which one I want to do. For example, this one, and I can open it on up. And you can see my icons here, and I can then save and open for the favicon. And now we have our help center here. Okay.
Yep. So just in case you're wondering what a favicon is that small icon that you see on the top of your browser. When you look at the just above the address bar, you have the header, the browser header, and right next to it there is an icon. That is a favicon. So you can put your own branded favicon there now.
Yes, correct. I think it's just showing right now that the old one, but yeah, you can put your new one here, right?
Yeah.
Excellent.
So yeah, the next item, customizing contacts column view. You can configure the view the way that you want. More power to the users, and David will show us how.
Yep, so we're going to go to contacts. Inside here, I can see my wonderful 3 contacts: name, phone number, open deals, owner, visibility, and label. But it may not provide me enough information, so I may want to click on customs, and I can see all my fields here. So maybe I want to add up like follow-up. I'm not too interested in, what's it called? Let's see, organization, maybe people organization. And then I can move it around. So I can move this on up here. Maybe I don't want visibility. I don't need label. Oops, sorry, I don't need label. And you can see I'm moving it to wherever I like. So I'm going to move it here. And then I can save it. And you can see now I have my custom field here. I have my phone numbers, deals 1, open. So maybe I have a follow-up. So maybe follow up by email, maybe call back. I can add another field in here, last time contacted. So that way I can see all the information on the screen and how it relates. So, okay, supposed to contact this person in 1 week. I can have 1 week here, call back, and other information. And that's a quick look at changing the columns. And just to mention quickly, you can always restore default here. And you can always search for the columns above. All right, so that's a quick look.
So yeah, a couple of questions that I keep getting asked here. One is that why is name not available for moving around or checking? That's because that is like the only mandatory field. We need the name to be there. So there has to be at least something that shows up in the grid. Otherwise, you have if you have the option to uncheck everything, then you won't see any data there. And that is not something that we want to, happen, right? I mean, you want some data there because you have your contacts in there. And if by mistake somebody unchecks everything so yeah, I mean, that's not a good practice to have. The second is that where can I uncheck or check email? So if you notice, there is no email option available there. That is because we show the name and the email together. And if you want to, let's say, search or filter by name or email, then you can just use the search box actually.
Oh yeah, search box here.
Yeah, just use the search box. So both name and email, you can just use that. And both name and email cannot be like unchecked or removed or filtered out like that, because they're already available through the search box. And we need to have that one field absolutely there to show something there. Otherwise, it's a blank page. Now, there was another question on this customized column view that I remember, which somebody asked in the forum, which was, when are we getting this in books? So yeah, we will get this in books. But in books, there will be more restrictions. For example, in CRM, you have complete control, right? I mean, apart from name, you can pretty much, remove every other field and it's not going to make an impact. But in books, there are certain data points that you always want to have there in front of you. So we will try to have something similar in books, but with little bit more restrictions, because yeah, hey, you need you definitely want to see your due dates, and you want to see your paid amounts and unpaid amounts and due amount, etc. So the flexibility that typically you would have in Deskera books is lesser than what you would have in Deskera CRM, which is why in CRM you can pretty much remove everything if you want to, or change it in any which way. But for books, there will be some more restrictions. But yeah, having said that, the objective, I guess one of the primary reasons why they asked the question was because they want to be able to see all the custom fields easily without having to actually open the invoice. And yes, we are providing that option. So you will have a view custom field option against each line item in the grid view. And you can just use that to view any attached custom fields with that particular document. Okay, so yeah, let's move on to the next item, which is capturing negative amount for expenses. So over to you, David. Now we can capture negative amount in expenses, and David will show us how.
So we're going to go to buy right now, and then we're going to click on create new, and then I'm going to add in a new bill. You can also do a new order as well. Then inside here, I'm going to add a contact. For example, bulk computers bulk, and I'm going to add in a new line item. I'm going to put in maybe desktop computer. And maybe because I buy 10 of them. I can add in line, and I can add in a CY, Chinese New Year. CY. Yeah, there we go. Chinese New Year promotion. And then maybe, for example, since I'm doing that, I get negative 20 off. So you can see this is reducing it by 20 bucks. And then I can save it. Yep. So now I have that there. And it should probably reflect on design, right?
Yeah, it will. Now, a typical use case is as is what David demonstrated here, which is adding global discounts, right? So you can add line level discounts typically in the system. So for each line item, you can define a discount. But for the layout guy he broke my chain of thought. So it's coming back. So apparently I was putting my hand in front of my mouth and he does not like that. So I have to move it down. So anyways, yeah. I mean, you can give line item discounts, right? But if you want to add discounts at the global level, then you can use this option. So let's say you don't want to enter line by line, you just want to enter one net discount at the bottom, then use this option to quickly enter the discounts without having to do it in each line. So I mean, think of it this way, right? Let's say you have 5 items and you want to give a $20 discount on the total price. Now, normally you would have to divide that $20 into 5 different sections by saying $4 in each section, right? And that is how you get a total of $20 discount. But now you can just add this line with a minus 20 and that's it. I mean, it's a lot simpler than what it was before. And so, yeah, use it.
Excellent.
Okay, so yeah, let's look at the next item, which is capturing bank and transaction fee. So I mean, whenever you're doing bank transactions or any other kind of transactions where you're receiving money or paying money, right? If you're doing it through payment gateways or bank, etc., there is usually a transaction fee involved, and we have made it easier for you to capture that fee now by by allowing it to be captured right at the stage of the payments, and David will show us how.
All right, so I'm just going to click on sell right now. I'm going to click on get paid for Austin Circuits. Get paid for Austin Circuits. And then I'm going to select my payment method for bank transfer. And I can add here a transaction fee. So maybe it'll be, let's see, bank charges. And I can put in the amount here, maybe $10. Then after that, I can choose the date. Put in the reference number. Click next. And I can receive it. So you can see I just added the bank transaction fee here, $10 US to bank charges, and it's done. I can then also go and see the journal entry under accounting, journal entries. And I can see this one here, receive payment, and you can see my bank charges here as well. And that's a quick look at bank charges or transfer fees and stuff like that.
Wonderful. So yeah, let's go to the next item, which is an update about UK and Netherlands. So both UK and Netherlands, we shared the first look at both UK and Netherlands compliances last week, and I'm glad to share with you that Netherlands compliance, the first version is out on production, so you can actually go ahead and try it out. UK is going to be there soon. I think within the next week is when we can expect UK to be out on production as well. So both of these are there, and then obviously we are going to keep adding more compliances as we have. So there's Belgium coming up, there's France, there's UAE that we will be adding. So yes, more and more compliances are coming your way, and don't worry if you don't see your country in the compliance list, because see, I mean, our roadmap, we don't want to create a roadmap for the entire year, but it's better to do it, quarter by quarter. So we have it for the next couple of quarters, and then as we finish off, we will be adding more countries into the system. And with that, we come to the last item on the agenda today, which is state and federal tax calculation for all the states. So far, if you remember, when we launched back on 17th October, was it? Yeah, 17th October, when we launched Deskera Revamped, the payroll only had support for the state of Texas in the US. And from mid-October to now Jan, we have full support for tax calculation for all the states, not a single one left behind, right? All the states in the US. So you can now go ahead, run your payroll using Deskera people, doesn't matter which state you are in. The calculations will be there. You will have your reports in the system. Go ahead, use it. Let us know. And David will show us how it can be done. So over to you, David.
Excellent. So inside here, we're in people. And then we're going to click on settings, and we put on the company settings. So this is where you can put in your address, your city, your state, county. And then after that, we can go into our employees and we can edit them. And inside here, you can see all the normal information that you would put in. And you can see the contact details. You can see the address and all that information. And then you can put in and fill in this information and filing status as well. And you can save it. Then after that, you can go to payroll, click on pay run. And then you can go and execute the pay run. For example, you can see Luke Skywalker has to pay, or deductions is federal withholding, federal Social Security, federal medical tax, and then you can see the employer's deductions, Social Security, Medicaid, unemployment tax, and unemployment tax as well. And then you can see the net pay here. Then you go next. You can process the payroll. Are you sure? Yes. And then you can view the summary. And then you can see the information. It all looks good. And then, sorry. Yep. Then you can see if all the information looks good. But the key thing here is the address. So your company address and your employee's address. So that's where it's going to be calculated from. So you have to put in the proper information there, and then it'll calculate accordingly. So each state and each county and all the other ones all have different rules and regulations. So that's why it's key that this information is put in correctly. I remember, what's it called? My dad telling me that there was these wonderful employees in the States, and they were implementers, and they were working from one of these cities, meaning they were staying in this city. But because they were staying in the city, they had to pay a certain type of income tax on their salary because of it. So all these small little compliances are very important. So the address is very, very key.
Yeah, I mean, I remember when we started building this, right? I think, I mean, it changes based on your street address also, right? I mean, if you are, if person A is in street A and person B is in street B, then they will, even though it might be in the exact same, zip code or pin code, same, location or city or town or council, they still have different tax calculations. I mean, we have seen such cases. So I was surprised that it is down to that level, which is why it's important. I mean, when you're running your payroll, just make sure you enter the right addresses. Let Deskera take care of the rest of it.
Correct. Absolutely. So, do you want to do any Q&A right now?
Yeah, let's see if there are any questions here. We have Robert. So welcome, Robert, to the Deskera family. So glad to have you here. And um, this is one of your businesses, Fire Lizard IT Solutions. Awesome. So yeah, I mean, great and welcome here. We have our Facebook group, so you can join the Facebook group if you haven't already done so. There are a lot of learning resources available there. Then we have these webinars. There are some training webinars that we have recordings of on our YouTube channel as well. So there are a lot of resources available to help you on board. Plus, we obviously have our awesome support team uh, in place to help you. So any questions, just give us a shout and we'll be more than happy to help you.
Definitely. Also, we have the wonderful blogs that you created, getting started with CRM, people, and books, which is a great resource.
Yeah, I mean, if it helps, then yeah, that's very good. So there was one discussion actually I saw in the forum today about. So I think somebody had migrated over from Wave, and they were finding it a bit difficult to get used to Deskera initially. And I understand that, right? Because Wave is designed for a very different purpose. Wave is not, I mean, it is an accounting system, but it is very, I mean, it targets a very specific audience. If you are looking at Deskera, then you are looking more at like QuickBooks, etc. But having said that, we are uh, adding, all those features in. All I'm saying is just have some patience. We launched like literally on 17th October, and we have been adding and developing at a breakneck pace. We have added so many features in the last few months and weeks, which all of you are aware of. And obviously, it's a lot of that is down to the great feedback that we get from the community. And one thing I can assure you of is that UX and quality of life features are very high on our priority. In addition to all the compliances and the new modules that we are adding, and that is work that is simultaneously happening, right? So even though you might not see it on the roadmap, because QOL/UX is something that is an ongoing process for us. And every week, if you notice, right, I mean, every week we have made improvements to the UX, added new QOL features, which help make things easier. I believe actually, I mean, I remember a few weeks ago, I had a discussion with the product team about giving the option to add contacts directly from the expenses screen. And today somebody asked for it. And the good thing is that we already have it in the system now. So yeah, I mean, we are trying to predict your use cases as wherever possible. But yeah, I mean, just keep telling us, keep sharing with us your feedback, your your use cases that you have, and we make sure that we incorporate that, or we try to solve that problem for you. Okay. All right. So yeah.
Any other questions, I think, or everything good? Ready to start the weekend?
Yeah, so looks like it. Again, I think it's all. I mean, a part of that is also probably down to the support that we, David and the team have been providing. Oh yeah. Oh, we have a question here from Robert. Please add employee attendance, log in, log out would be great with 24-hour options. Interesting question. I'm glad you asked it. We had this on our mobile app. So in our mobile app, we had the full attendance module earlier when we launched the mobile app first, with the option to do clock in, clock out. You can set your shifts. You can configure your attendance teams and attendance approvers and everything. And everything was doable on the mobile app. But it was then fully integrated with the web app. So we have kind of hidden it for now, right? But yes, it will come back pretty soon. So to give you an idea of what are the features that you can expect there, so in addition to obviously being able to clock in and clock out and being able to set shifts and durations and working days, etc., you will have the option to create geofencing rules. So for example, you can create a rule that people can mark their attendance only if they are connected to a particular Wi-Fi, right? Or they can mark their attendance only if they are within X meters, or some distance of the location or the GPS coordinate. So it will have lots of options, and you can expect to see that in the near future, once we have finished what we are already working on in the payroll part, which is basically getting all the compliances in. And as soon as all those compliances are in, then we will be integrating the mobile app back to the attendance application in the HRMS/people application, and that will allow you to use this. Hope that answers your question. Let's see if we have anything else here. David, is there anything that you want to share? Any experiences from the past week or so? Some interesting problem that you encountered which had like a unique solution or something?
Let's see. Anything interesting? Usually it's mainly for data uploads and statutory compliances. The key thing is I find that in the upload templates, it's not identified which ones you must upload, or the system will it won't work. Like, for example, with one customer from Malaysia, 3 fields were specifically required to upload the customers. But when we uploaded, we didn't get an error message, so we're banging our heads. We eventually figured it out and got it through.
Yeah. So yeah, that's good feedback. So yeah, just make sure that we are highlighting those mandatory fields in the Excel file as well, and just displaying the message. And if in the sample file those are highlighted, then it will be a lot easier.
Another thing was this guy was selling items to Amazon, and he would sell them. He would send them off in a bulk, meaning it'd be a bulk item, but there'd be individual pieces inside them. So Amazon would sell the individual ones. So if you use a bill of material to build it up, you can't break it down and resell it later on. So one thing, a workaround we were looking at is maybe using a warehouse called Amazon. So you would send all the items to Amazon, and you can keep track of how many bundles are there or how many pieces are there, and then they can sell it off from there as well.
Yeah, that's a creative way to solve that. In fact, this reminds me of another such example, right? I was talking to this team who sell honey, right? And they have, they sell twigs of honey, and then they sell packets that contain honey twigs inside them as well. And the thing is that they treat it as separate UOMs. So when you look at the stock report, then you see different entries for the individual items, and a different entry for the packed item, right? That's how the stock is structured. So one quick way to do that right now is to do stock in, stock out, obviously. But in the long term, we will be providing multi-BOM functionality. So multi-level BOM will allow you to actually create this. So you have a finished good, which is let's say a twig or something, right? And that is made from some raw materials, and then you use this twig to create a pack, which is like 6 twigs, right, and one pack. And this is an example of a multi-level BOM which you will have in the system towards the end of Q1, mid Q2, around that. Yeah. But in the meantime, you always have the option to do stock in, stock out. And in fact, I have found that many people find it easier to do stock in, stock out, especially for businesses where your finished goods do not follow a set formula, right? So sometimes if you use 5 items, but sometimes you end up using 7 items to make a similar product, right? Or for businesses where the finished goods is a custom product, right, it is better to just use stock in, stock out. If you try to do this much formulation for maybe 10 pieces that you're going to sell, it's probably not the best investment for your time. So depending on the process, right, or depending on your business, if you have a fixed BOM and that is the same formula that you use for everything, you're not doing a lot of customization and stuff, use BOM. If you're doing a lot of customization for all your finished goods, finished products, use stock in, stock out. Just easier. Okay.
Sounds good.
So yeah, that brings us to an end of today's webinar, and thank you everybody for joining and being a part of this. And we look forward to seeing you in the next webinar, which will be announcing on Facebook, LinkedIn, Twitter, social media, email. I'll have a plane, flying around saying webinar on XYZ. So yeah, look out for it. We'll share it with you, and looking forward to listening to your inputs, your thoughts, your suggestions, your feedback, and any questions. So thank you so much.
Have a great Friday and a happy weekend.